Good afternoon. This is Tom Aspray with the Viper Report. It's Wednesday, May 15th, just about less than an hour before we close. Been a good day for the stock market. You can see the Dow opened lower here in early trading, but then turned positive about 10:30, and it's been strong throughout the day, showing a series of higher highs and higher lows. Currently up 166, NASDAQ even better, up 96, and the S&P is up 21 points. Overall, a pretty good day, particularly after the way the week started. This chart of the DIA, that's the ETF that tracks the Dow Industrials, shows you why we've gotten such a nice rally. We came down on Monday below the daily Stark bands, these dashed red lines, and also back to support from both March and earlier in the year. And so a bounce was pretty normal. Does that mean the worst of the selling is over? Well, you can see that the Dow, by this relative performance analysis, is still lagging the S&P, so it's not my favorite index, and the volume has not yet turned positive. But the chart suggests we can move up maybe to another 200 or 300 points in the Dow, up to this 20-day moving average, which is right around 26,000. That's the next key level to watch. The high volatility is likely to hang over the market for some time. You remember in February 2018, we saw a similar spike in volatility, and the markets were pretty choppy for another 6 weeks before the major trend resumed. In last week's Forbes.com article, I talked about the fuzzy math that the public was getting about the impact of the tariffs and who was really going to pay. By the end of the weekend, the administration had to fess up that China really wasn't paying these, and it was suppliers, companies, and consumers. As I pointed out in the Forbes.com post, my daily trend analysis turned negative on Tuesday, May 7th, though the weekly and monthly remain positive. You can see this chart of the SPY with the 80 line dropping below its support as prices were testing the daily Stark bands. This morning I posted another article on the commodity markets looking at crude oil and gold. I think you might find it interesting. Gold has been looking very positive technically. We were recommending buying on this pullback here, and then on May 2nd, gold gapped lower, adding to our longs in GLD right near the lows. And you can see that the technical studies have confirmed a bottom. Got a strong market action on Monday. Now we need to see a move above 1325 to confirm an important low. In the last free video lesson, I showed you how my indicators can be used to select individual stocks for purchase and focused on Harris Corp, HRS, which has had a great run to the upside. Other videos are also on the Facebook site, including on setting up those indicators on stock charts. So they're there for you to see if you have not viewed them yet. Harris has been acting very strong. Had a dramatic move to the upside here recently, and then powered to the upside today. You can see it's at 184.29. We're long down in the 163 area, down in here, and holding on to half of our long position. Group 1 Automotive is another stock we like. Made some nice money in here. Took some profits ahead of earnings. And the stock hit a high of 81.65, then dropped down to 74.43 on Monday, when we got back in on the long side. Up 0.5% on Wednesday's trading before the close. And another strong close will point to even higher prices. The R1 resistance we talked about in the last video is at 83.83. Well, that's all I have for today. But I'll be updating you over the weekend. If you're interested in specific advice on stocks, you can go to the viperreport.com website, see some recent articles, and click on Viper Hot Stocks to get specific stock buying information. Or if you're into ETFs like GLD, which has had a nice run, try the Viper ETF report. Just $34.95 for 2 reports each week. Lots of valuable information. And as I pointed out in the last email, there are also special market updates when things get crazy. Hope the rest of the week goes well for you. Thank you.